Right. Good morning, everyone. My name is Natasha Hartson, and I am the Director of Entrepreneurship and Innovation with Wood Buffalo Economic Development. I'm excited to be here today and talking with Cole. Cole is an associate with Bryan and Company, and he practices in the area of corporate and business law, commercial real estate, commercial transactions, and corporate finance. And I understand he's building his practice in the areas of mergers and acquisitions, security technology, and intellectual property. So he's probably got a great wealth of knowledge to share with us today. He will be speaking to us on the Canadian Emergency Commercial Rent Assistance Program today. And yeah, I just wanted to welcome everybody, and I'm really looking forward to hearing what Cole has to share with us. I'm sure he's got lots of great information, and I know there's lots of questions out there about this program in particular. Actually, on that note, in regards to questions, if you do have a question, we ask that you please use the Q&A dialog box, which you can find along the bottom of the screen. So if you just want to add your question in there, I prefer if you don't use the chat, because the chat box gets a little busy sometimes and we lose questions. So just at the bottom in the Q&A box. So what's going to happen is Cole's going to do a bit of a presentation to us. He's going to speak through the program and give you some ideas around it. And then we'll open up to Q&A. So, but that said, if you have a question throughout, throw it in the dialog box and we'll make sure it gets answered at the end of the presentation. So without further ado, I will pass it off to Cole. And hopefully you can unmute yourself. One sec. There we go. I've unmuted you, so hopefully you just need to do yours. There you go.
There we are. Good morning, everyone. I appreciate you having me. Thank you to Wood Buffalo Economic Development for asking me to have this presentation today. More than happy to chat about it. The Canadian Emergency Commercial Rent Assistance Program has been something that's been in development for a little while. It was announced by Prime Minister Trudeau several weeks back, but it's taken a little while for the program to kind of get its legs, get some details, and ultimately the application process and eligibility requirements and those types of things to kind of come to fruition. Part of the reason for that is commercial leasing and commercial rent and that type of thing is actually a provincial matter in terms of responsibility at a government level. So other provinces actually have legislation that governs these kind of procedures and how much rent can be charged and increases and those types of things. Alberta is not one of those provinces that has a specific body of statute that governs commercial matters. So unlike residential tenancies or things like that, ultimately it's left to the parties in the marketplace to kind of work together, come to an agreement and govern the relationship between them. So today, what I thought we might do is I would give a broad overview of the program generally, go through perhaps the eligibility requirements, the application process, a couple of concerns about, while I get this funds and we participate, what can I do with them? And then maybe some considerations about if you choose not to participate in the program or you aren't eligible, what are some other programs or initiatives or options that I might have as a business owner or as a property owner to try to help wade through these difficult times. So I guess maybe we'll start with the I'm going to call it CECRA throughout instead of doing the full name. So the program is designed and intended to assist small business owners meet their rent obligations for April, May, and June of this year. When it was first announced, it wouldn't have been in time for April, but it certainly would have been in time for maybe May and June. But that being said, the portal didn't open until the end of May, and so now we find ourselves in a situation where, although it's for rent for months that have passed, they've kind of opened it up such that we're now in a position where we're able to make that 3-month period apply retroactively, so into the past, or actually moving forward. So even though it's supposed to apply for April, May, and June, the landlord and tenant or property owner and tenant have the ability to kind of move that money around as they need it or as they see fit. So under the program, what is proposed is the tenant would pay 25% of their rent obligation for a given month. The federal government would provide assistance with the provinces to cover 50%, and the remaining 25% would be absorbed or forgiven by the property owner. Now, ultimately, before we can even really consider the eligibility requirements, one of the key pieces of this program is that it's optional. So it's not a mandatory thing. The government can't impose or require a property owner to participate in the program. And likewise, even though a tenant might be eligible, they ultimately have to have the buy-in of the property owner in order to actually proceed with the loan and the rent relief. Obviously, that presents some concerns. Landlords are in a position where they get to dictate a benefit to a tenant. But for the most part, we are seeing a lot of property owner willingness to participate. It makes sense from a business perspective in a number of ways. And it also, it is there to help assist in a time of need. One of the concerns that has been raised is obviously all small businesses are affected during this time, some more than others. But there is a concern from some tenants that, okay, well, I'm eligible, my landlord has agreed to participate, but I'm ultimately concerned that I can't even come up with my 25% share. And so there's a number of things that can be done to help address that. There's other loan relief and emergency response programs that have been made available to small businesses. Likewise, it's ultimately an option that maybe that 25% can be deferred, maybe it can be forgiven, or maybe the landlord and tenant can come up with an alternative arrangement as to how to provide that 25%. So maybe let's move to eligibility requirements. So this has been an area that's been kind of in flux, even since I started looking at this program, end of April, beginning of May, and then throughout the month of May, the requirements have kind of changed a little bit. Some of it has been clarification. Some of it has been reconsideration of certain groups that were excluded, whether intentionally or unintentionally at the time. But now they've got a fairly robust set of eligibility criteria with some fairly good detail in terms of how to actually determine whether you're eligible. So the very first thing is that for the tenant side or the small business owner side is you have to have open for business before March 1st. Rationale for that seems to be if you unfortunately were opening up past that, maybe you could have delayed your opening. They want to somewhat have a precedent set that your business was up and running before this, and then COVID swept in and affected your operations. Second criteria for a small business owner is that your gross rent for your premises that you've leased cannot exceed $50,000. So I'm grateful that they've clarified that that's gross rent. Previously, they just had it described as rent. So gross rent would include your monthly basic or minimum rent, operating costs, property taxes, percentage rent. Maybe you have a retail business and you pay a percentage of your sales to the property owner as rent. And it would also include other things such as additional rent items is what they would normally be considered under the lease. So things like utilities or management fees or things like that. So all of that bundle of costs together cannot exceed $50,000 on a monthly basis. One of the other criteria for tenants in order for them to participate is that your net revenues on an annual basis don't exceed 20 million. So this is, again, that ties into they're trying to assist small businesses, not necessarily larger ones. And that $20 million threshold is taken at the ultimate parent level. So if you are a small business owner that are a subsidiary or a company that is under a larger parent, the $20 million is taken into account at the ultimate parent level. And then lastly, and perhaps the most significant one is that you have to have experienced at least a 70% reduction in revenue for April, May, June in terms of your business operations. Now, they've since gone ahead and clarified how you can calculate that. So what they've said is for the months of April, May, and June, you can go ahead and look back at 2019's revenues and compare them accordingly. If there's a 70% decrease, perfect, you've met the threshold. If you weren't operating or you didn't have revenue for last year, you can go ahead and use your average revenues for January and February of this year, and then actually use those to calculate the 70% drop. Now, one of the concerns that's been raised by a number of tenants is, well, I've been affected and I've been hit hard, but what if I don't quite hit 70? What if I'm only at 40? Or what if I'm only at a 60%? Does that mean I'm ineligible? Previously, I would have said yes. However, on the CMHC website and a number of sources have now said that even if you don't quite meet the 70% threshold, and if all the other requirements and the landlord has agreed to participate, go ahead and apply. They are trying to get this relief into as many hands as possible. I can't say for certain whether the application will be approved, but they're at least encouraging all applicants that have been affected to apply, which is welcomed. And 70% is certainly a significant, but that doesn't mean a business isn't meeting, it isn't having a hard time just because it hasn't quite reached that threshold. In terms of eligibility on the property owner side, a little bit of a different criteria. Obviously, as I mentioned, you have to have a willingness to participate, and landlords, for a number of reasons, might choose not to. We can discuss that a little bit more later when we maybe address options that are available outside of the program. But in terms of eligibility requirements, property owners obviously need to have commercial property with small business tenants. So mixed residential and commercial would be acceptable if you had condos, business condos on the bottom and residential living on the top. It would be eligible for your small business tenants, or otherwise, multi-tenant properties and all that would also be included. Previously, the government had required that the property owner have a mortgage on their property. The intent of that was to provide some assistance for banks. Now they've gone ahead and clarified, quite rightfully in my opinion, that all property owners are eligible to apply regardless of whether you have a mortgage or debt or financing on your property. If you own it outright, or the company owns it outright, you're welcome to participate and be involved in the program. And lastly, there's a couple of fine print items. The property owner can't be a federal or provincial office holder, or likewise, if you're a corporation, the person who controls the corporation or the individuals that control the corporation can't have political or provincial federal government involvement. Obviously a limited set of circumstances, but it needs to be a non-government political entity or individual. Now, maybe we can actually just scroll here. I'm going to move my thing down. Application requirements, because I think this is probably the meat and potatoes, so to speak, of the actual program and the process. What do I need to do? So I've determined that I'm eligible. The property owner is also eligible and willing to participate. We want to be involved in the program. What do we actually need to do? So there's a couple of different requirements. The very first one is you need to have a rent reduction agreement. So this is the actual agreement that agrees that the rent for April, May, and June of this year will be reduced by 75%. Now, it's a bit of an open topic in terms of, well, 75% rent, does that mean minimum rent? Does that mean additional rent? Does that mean rent at the global level? Is that just, is utilities counted? And we've been generally proceeding on the basis that 75%, depending on how your lease is structured, should be the minimum or basic rent, and then any alternative arrangements that wants to be agreed to between the tenant and the property owner, such as a reduction in utilities and all that type of stuff, can certainly be agreed upon, but isn't necessarily a requirement of the rent reduction agreement. So the rent reduction agreement, tenants and landlords or tenants and property owners don't need to dream it up on their own. Canadian Mortgage and Housing Corporation has actually provided a template that the parties are welcome to use. It's in an editable form on the CMHC website. I believe Natasha had a link in the invite that directs you. You'll be able to find it. They've done a very nice job organizing the page. So you have an application process tab on one side and then a program details tab on the other side. And it'll give you all the sample documents for everything you need to actually apply, which is quite handy. It's in a pretty good form, and it should be largely straightforward such that the parties can integrate it into their lease if they like. The rent reduction agreement, in addition to the actual 75% reduction in rent, also needs to include a moratorium or a prohibition on eviction. So part of or default notices. What that means is that, for the period, whether it's April, May, and June, or whether it's a period that you're going to apply the funds to later, if you've already made those obligations up, that the property owner can't then go ahead and proceed to, evict or otherwise note the tenant in default for a COVID-related or financial-related default. So what that means is, we're providing this program and this assistance to help provide rent relief during this time. The property owner can then go and say, well, I didn't get my full money on time, or you're otherwise haven't remitted your payment obligations, so you're in default and I'm going to proceed with eviction. So we'll talk a little bit about other defaults and the actual eviction process a little later on, but ultimately the rent agreement can't go ahead and undo all the work and all the application that the parties have made to actually participate in the program. On that note, the application process in the rent reduction agreement, it can be entered into retroactively. So the program and the application process is going to be open until the end of August. So if either the tenant or the property owner want to wait, they want to see how the reopening goes, or they don't need it now, but they might need it later, or the property owner finds themselves in a position where they haven't gotten as much funds as they had foresaw, and they're trying to do some future planning, the program is going to be available up until the end of August, and you can actually apply retroactively to amounts that have been provided previously, which is nice because it gives some flexibility and it doesn't force either party to make a decision now that they might be better informed to make later. Another of the application requirements is a property owner attestation. It's just a simple document that basically confirms that the property owner meets the eligibility requirements and otherwise has provided correct and accurate information in its submission. If anyone has applied for CERB or any of the other relief programs, this is a very common requirement. Basically certifying that the information you've provided is true and accurate, such that the government can rely on your application and your submission. In a similar vein, there's one for the tenant that the rent agreement provided is accurate in effect. The name of the business is the one that's actually carrying on the business. Just some basic information that confirms the details of the tenant. All right. Another area that's not a direct requirement, so it's not something that we would need to upload to the portal itself, but it relates to the application process. In order for the tenant to prove its eligibility to the property owner or the landlord, and to get all of this information and documentation ready, and to ultimately say, I attest to this information being true, there's some financial disclosure and disclosure related to the tenant's business that's ultimately needed. So things like financial statements or revenues, those types of things need to be provided, which might not normally be needed under a normal leasing situation. You might just, provide them when you initially become a tenant, to show the landlord that you have the financial capability of being involved in the lease and leasing the property. But now this presents a bit of a wrinkle because, arguably it falls outside of the standard lease documentation, and it's kind of confidential information of the tenant ultimately. And so one of the things we've been recommending during this exchange of the information is to perhaps make sure that your rent reduction agreement or lease amending agreement has a confidentiality provision that just ensures the tenant's financial information is treated with confidentiality obligations and a non-disclosure. The portal itself doesn't require those documents, so you're not submitting it to the government or anything like that, but the property owner, in order to make their attestation and confirm your eligibility for the program, will need to have confirmed that your revenues did in fact dip, and the only way they can really do that is by looking at your financial information. Now, on the flip side, there's probably some confidentiality from the property owner standpoint. Obviously, a number of property owners will have multiple tenants that may be involved in the program, or different tenants getting involved in the program at different times, depending on the nature of the building or the property owner's situation. And so there's probably some concern from a property owner standpoint that tenants could talk to one another. The relief provided to one tenant might not necessarily be the identical relief provided to another. And so the property owner might want to have a confidentiality obligation such that the tenants aren't, disclosing the terms of their specific deal to other tenants. So just kind of a reciprocal confidentiality thing that I would recommend be included in the rent reduction agreement or lease amending agreement, just to make sure both parties have peace of mind and they know that they're in this process together, and so they're relying on each other to keep their personal information confidential. Maybe now we can just chat quickly about the actual portal and the application process itself. So you've determined you're eligible, you've completed the 3 documents, you've applied. Now what? So the portal itself, they're experiencing some technical difficulties, and calls into 2 hours or more. So there has been a little bit of logistical issues.
You kind of, I don't know if it was just for me, but I want to make sure you maybe repeat what you just said, because you went a little, your microphone went a little funny there. So I don't know if everybody heard you. Hopefully it happened to everybody and not just me, but just if you can repeat yourself just now, that would be great. Sorry.
Absolutely. Sorry, my apologies. I was just referring to the portal itself. So the CMHC has an online portal. It's the same website link that Natasha linked invite. And so on there, it has the ability to upload the 3 documents, the 2 attestations, as well as the rent reduction agreement. But I just wanted to give your participants a bit of a heads up that there have been some technical difficulties. They seem to have largely sorted them out. As I'm sure you can appreciate, portal opened up on May 25th, and there was quite a flood of applications in the initial couple of weeks. People are still actively applying, and so it's calmed down a little bit, but there might be a glitch or 2 or a bump on the road during the application actual upload, but we haven't had any reports of any concerns from a documentary standpoint. Likewise, they're available by phone. There have been some larger than normal call volumes, as there have been throughout the COVID process, but they are actively responding. They're doing a really great job in facilitating this. So if you have any difficulties, you can actually call in to CMHC directly, and they'll administer. Now, that being said, once you've actually applied, they say it'll take up to 2 weeks to actually get the funds kind of in your hands. And then once the funds have come in, there's a bit of a priority list in terms of what they recommend the property owners do with them. So you've met your eligibility requirements, you've completed your documents, you've applied, they've approved you. The funds will be subject to a loan agreement. They're on their way, you get them. The very first thing that they want property owners to do is reimburse the tenant for amounts paid in April, May, or June, or at the tenant's option. If they say, I wouldn't want the refund, I'd rather have a credit, the tenant is entitled to credit the amounts they've paid previously to future months. The second thing that they would like done by property owners is to then apply the loan proceeds to operating costs, property management, all the things that go into administering the property and the building that the property owner and tenant occupy, and generally reducing the burden that the property owner is carrying by not getting necessarily the full amount of rent. There are a couple of strings attached to the money, ultimately subject to the loan agreement. CMHC had a copy of the loan agreement between what will be the province and the federal government and the property owner. They had a copy on the website. It's since been removed. And so my understanding is that it'll actually be sent to the property owner directly once the application process has gone through and you've been approved. So it's not there. Unfortunately, you can't get a preview of what it will be, but it will ultimately find its way to the property owner once the application process has been completed. Now, I wanted to talk a little bit about non-participation in the program and other options, and some reasons or concerns why people might not want to participate. From a tenant side of things, obviously the biggest hurdle is getting the property owner to agree to participate. As I mentioned, it's ultimately up to them. It's been strongly encouraged. Other provinces and their premiers have said there'd be consequences for not participating. That hasn't occurred in Alberta, and so ultimately it's still been left up to the individual property owners to make that ultimate decision. Now, from a property owner perspective, the concerns, I guess, perhaps are a little bit on uncertainty in terms of costs. There's some time involvement. The concern, I suppose, also for property owners is that depending on the nature of the building you might have, you can certainly apply for all tenants in a property at one time, which is great if the landlord or the property owner are going to permit all tenants in a multi-tenant building to participate. You make one application with all tenants, and it's certainly less time and cost from an administrative perspective. But the business reality, and I think the economic reality, is all tenants and property owners might be in a different spot. Some might have been able to operate as an essential business throughout the time. Others might be getting back up and running, and so it might not be needed right now. And then, the property owners could be in a situation where they're having to go through this process multiple times from multiple tenants at multiple different stages. It might be a disincentive for them not to participate. Likewise, landlord or property owner might prefer to enter into their own form of agreement, their own rent abatement or reduction agreement with the tenant directly. Maybe it's time for a lease renewal or otherwise, a term extension or things like that. And so, as part of that process, they're willing to provide some rent relief or some rent-free periods instead of participating in the government program. The property owner and tenant are always more than welcome to enter into their own form of agreement and otherwise deal with it amongst each other and themselves. Other concerns, I guess, from a tenant perspective would be those financial disclosure obligations. That may involve a parent company, that may involve having to get advice and input from their accountant or their bookkeeper, who may or may not be available to do it right now, or may have other time commitments or obligations. And so it does increase the administrative kind of time and the burden of getting all of that to in a position to provide to the property owner to actually apply to the program. And then for some, and it's an unfortunate reality, this program did take a while to get up and running. Obviously, we're now, dipping back to the beginning of April, which is 2.5 roughly months ago, and unfortunately, it might just be too little, too late. And it's a hard reality to face that, this assistance might have been needed earlier. Unfortunately, it took a little while to get the cogs and wheels spinning a little bit on the program, get the details out so it could be administered in a functional kind of way with good, consistent terms across the country. And unfortunately, some businesses might not have been able to weather the storm up until this point and might be in a position that they can't take advantage of the program simply because their business is in a position where that's not an option. Other considerations. So we spoke a little bit about the confidentiality and non-disclosure aspects. That's one concern. Another concern, I guess, is events of default versus eviction. So as I mentioned in the rent reduction agreement, there has to be a provision that specifies that eviction and default won't be carried out for a COVID-related offense, so to speak, under the lease agreement. But that doesn't mean that eyes aren't watching on other possible events of default. So there's a whole host of obligations that a tenant would have under their lease that could be impacted or that could happen that otherwise puts them in breach of the lease that aren't necessarily COVID related. So you still have obligations to, have the premises maintained and repaired. You still have environmental obligations and preventing hazardous spills and all these other types of things that wouldn't be precluded just because we're in a situation where COVID has put us in a bit of a different box in terms of a rent perspective. So just because the landlord can't take steps to evict or otherwise note you in default from non-payment of rent perspectives, particularly if you're participating in the program, doesn't mean that they won't have grounds to allege a default or another breach of a lease for other obligations or other responsibilities of the tenant under the lease. So my recommendation would be that the tenant continues to continue meeting those obligations, working with their property owners and their landlords to make sure that adequate heating, not such a particular concern, I guess, as we move towards the summer, but rent obligations aren't the only thing that tenants would need to consider under their leases. Continuous operation clauses under their lease. This would be one other item in addition to the confidentiality. I would just include or recommend the parties address. Most leases will have a provision that says, the tenant is to be in the premises and continually occupy and conduct its business. Obviously, that's been a bit dampered with the COVID. Maybe they could have been an essential business and carried on their operations, but they might have been shut down. Their hours might be reduced. They might otherwise be prevented from doing their normal course of operations. So I would recommend, to the extent the parties are able to or willing, just to put a small caveat to say that that continuous operations clause won't be a breach or an item considered if participation in the program is agreed upon and approved. And then lastly, I wanted to discuss the court process and access. So, obviously we spoke a little bit about preventing eviction and default, but ultimately there could be a situation, maybe it was a pre-existing breach that happened before COVID started and courts closed, and now property owners are in a situation where they wanted to, access those remedies for a given tenant, or maybe something goes wrong that is unrelated to payment of rent. Courts right now are slowly starting to get back up and running. They still remain closed to a majority of matters and are only seeing kind of emergent or urgent disputes. That includes, things like criminal matters and custody and things that are more pressing and imminent. Not to say that a commercial dispute isn't of a priority, but it ultimately just doesn't meet their threshold criteria for emergent concerns. And so they've given us no real direction in terms of when they plan on resuming hearing those matters. But it's just one of those things that I wanted to make sure that the property owners out there were aware of, that, you know, if there is a situation that arises, it could experience a number of delays from a court perspective in terms of accessing remedies that might otherwise normally be available to you. I do see that it's 20 to 11. I want to make sure we have enough time. I do see a couple of questions popping up in the Q&A. Maybe I will direct those and we can answer those, and then I can maybe provide a little bit of a summary overview of what we've discussed.
Awesome, thanks, Cole. Lots of great information, and I did see an email come in. You and I were speaking before the presentation got started that you do have a bit of a handout that we'll be able to share with participants via email following this presentation, correct?
Yeah, we as an office have prepared a CECRA program kind of overview. I can appreciate that it's quite a bit of information coming at you. I've been monitoring the program for quite a while, and honestly, it's been changing on a day-to-day and a week-to-week basis as details get filtered out. You know, they've included things now that, you know, certain charities are able to participate, and certain municipal tenants, things like airports and that, are now eligible. So they've been really fleshing out the program. So we've been having an ongoing kind of newsletter memo about the program that I'll be happy to circulate to everyone. We're just making some adjustments and some updates to add in some new information that's been recently added, but we'll make that available to everyone to help provide a summary of what we discussed.
Okay, great. Also, I just want to let everybody know that the session is recorded, so we will be posting it to our website. So if you want to come back and hear what Cole had to say again, like you said, there's a lot of information there. So, but jumping into the questions, the first one that we got was, and I know you sort of touched on this, so, but maybe just to reiterate, I assume this applies to rent rate per square foot only and not the additional rent, i.e. operations costs that are passed to the tenant.
Right. So great question. And this is one of the things that we were hoping to get clarity from. So the actual eligibility criteria, so determining whether or not you can apply, the $50,000 a month number is gross rent. So that would include the rental rate per square foot, as well as the op costs that are passed along to the tenant. In terms of determining whether the tenant is eligible to participate. So that would include both those rates. That being said, the rent reduction, so the actual agreement where the property owner and the tenant agree to reduce the rental rate, only says rent. And so it's been an open issue whether that rental rate means the per square foot or the basic rent or the minimum rent only, or if that includes capital R rent being every rental item under the lease. The approach we've been taking is that it's just the rental rate per square foot, or just the basic or minimum rental rate amount, because it's easiest to control and it's easiest to reduce. The other items, the op costs and that type of thing, get into a bit of a difficult situation where you agree to reduce those, might put the property owner in a position, you know, a bad one from a utilities perspective, or there might be other items that are technically considered additional rent under the lease, like interest payments on other items that I don't necessarily think they're intending to be captured. So we've been kind of keeping them separate. Eligibility, it's all rent, and then actual rent reduction, it's just the square foot rent. Of course, there's nothing prohibiting both parties from agreeing otherwise.
Great. I just wanted to actually add into this question a little bit, because you were talking about the $50,000 max. I was actually curious if you and your landlord had made an agreement pre this announcement of this program to reduce your rent for a period of time, whatever that might be. So does that count as the $50,000 threshold? So let's say you were at like 75 and your landlord had agreed to bring it down to 40 based on the current circumstances, and then this program was announced and you're paying the 40. Are you eligible to do the program on the 40,000?
That's a great question, and I admittedly don't have a clear answer from CMHC on that point. Previously, it was mentioned that it would be the average or the normal monthly amount. So in your example, would be the 70 amount would be what it was based on. But there's already been an existing reduction. that would obviously put you under the threshold and then eligible to apply. That would be an item I think would probably be best answered if you contacted CMHC directly and inquired on the phone.
Okay, thanks. Next question is this going to be going past June? I'm not sure if you know the answer to that. And if so, have any sense of how long?
Yeah, and so that's an ongoing item. They've made mention, and it's now actually nicely in writing on the CMHC website, just recently actually, that they're considering it. So they're evaluating extending the program for longer. Admittedly, don't know if that means they're willing to increase the number of months, so not only April, May, and June, but July, August onwards, or if that means that they are planning on extending the deadline to apply, meaning it's just going to be open for longer, but not necessarily cover any more obligations. I'm not entirely sure. That being said, if there's some concern that this might be needed later on, if you were to apply for the program, the property owner and the tenant could agree to have the amounts applied to future months as opposed to those 3 specific months. But in terms of will it get longer than June, certainly seems like it's being discussed, but that'll be an announcement that comes at a later date.
Thank you. Next question. They say, I may have missed this, but what if we have losses greater than 70% for 1 or 2 months, but not all 3? Should we still apply?
I would say yes. So they had a brief disclaimer and some updates that were mentioned to say, I'm in a situation where I'm for sure experiencing that reduction for 2 of them. June's obviously not over, so I can't say whether or not I'm going to meet that 70% threshold. Should I hold off? Do I apply for a couple of months, then apply later on? And their overarching and widely stated answer was no, apply once, apply now. So whether or not they would then provide relief for only 2 of the months instead of the 3 is a bit of an open point, but they've certainly encouraged application, even if you're largely in compliance with every requirement under the program, but there's 1 or 2 minor items that might not rise to their threshold level. They've encouraged application across the board.
Okay. On that note, I also had another question that kind of relates regarding your decision to actually reopen. So as we know, tomorrow, a number of businesses are allowed to reopen that maybe weren't anticipating it, learned of it this week. Is it in some of them, it may not be in their interest to open just based on programs such as this. Would that have any implication if you chose to not open, even though you could, knowing that your revenue would remain under that 70% reduction?
And that's a great question. They haven't put any criteria on there that if you're open and eligible, you have to be open and eligible. They haven't said that that's a requirement. Obviously, just because you can open doesn't necessarily mean you're able to open. You could have a business where, yes, I'm now eligible to be opening by the government regulations, but I don't have any supply, or I don't have any inventory, or I don't have my workforce back up and running. It's not an area that's directly addressed, unfortunately, by the details of the program. To the extent that you're making a voluntary decision not to open, I think that's certainly something that could be brought up with them directly, or noted in the application itself, and they can make that determination. Because I certainly appreciate that. I've encountered it with a number of retail tenants where just because you're able to open doesn't mean you're in a position to open. And so you're still suffering, you still need some relief. And I think that's the intent of the program. So I don't think that would automatically disqualify you, but ultimately probably is a question that could be raised with CMHC and the administrators of the program.
Mm-hmm. And probably something to work through with your accountant, sort of like scenario planning regarding reopening and revenues. All right, next one. Is there an arm's length requirement? In 2 cases, I'm the landlord, and I also have a relationship with the tenant as a board member of the charity in 1 case, and as co-owner of the tenant's business in the other.
Great question, and that's actually one of the clarifications they've since made, is that non-arm's length parties are able to apply. So if you are a property owner and have an indirect or direct ownership of the business that's operated, you see it a lot for professionals. Maybe a dentist or a pharmacist might own the building and operate business out of it. You are eligible to apply. They have a couple of additional requirements. One, you have to have an actual lease agreement in place as of April 1st, and the rent under that lease agreement has to be market rent. So it can't be a sweetheart deal. It has to be an actual market lease with market rent. And as long as you meet the other criteria in the program, you're actually able to apply.
Great, thank you. Is there any way that we could apply without disclosing our financials to the landlord?
Potentially. The concern, I suppose, is the property owner might require or properly should require for the tenant to confirm that they have experienced that reduction in revenues. If the tenant is able to demonstrate that in another capacity, then that's a possibility. But the financials are kind of an underlying requirement in order to demonstrate that and make the proper attestation. I'm not sure really how the property owner would otherwise know that you've experienced that without the delivery of the financial statements. But again, it's not a technical requirement, but it's a requirement in order to fully and confidently make the attestation, as well as satisfy the landlord or property owner that the 70% reduction in revenues has actually occurred.
I would assume that maybe businesses that I think of like arcades, movie theaters, things that have actually literally been closed and have no ability to offer their service online, maybe. But will there be anything else available if the landlord applies but is declined?
They do have a couple of other relief measures available. There are small business loans and other kind of relief. Even CERB, to a certain degree, is meant to help businesses, whether that's payment of payroll or ultimately a loan to help administer the business. I don't believe they have anything specifically targeted at commercial property owners and commercial landlords. Or rent relief generally, but I think they would encourage business and property owners, to the extent they think they need additional assistance, to try and access some of the other programs that have been announced. Of course, there's nothing stopping them from either extending the program as a previous participant had asked, or maybe creating a new program that would otherwise be available. But right now, this looks like it's in terms of a specifically targeted rent relief program.
Next one is do both the landlord and the business owner need to apply?
Great question. Ultimately, it's the property owner that applies, but the property owner, in order to make that application, needs to have the tenant's documents. So the tenant doesn't actually need to go on and apply at all. Its documents would be submitted as part of the package for the property owner, but the property owner is ultimately the one that submits the portal application. And just in case, I don't know if I mentioned it, but property owners are able to apply on a building basis, but not necessarily a multiple tenant basis. So if you were a tenant that had multiple locations, each individual property owner would need to apply. Likewise, if you were a property owner and had, tenants in multiple locations, you can do it on a building by building or a property by property basis, but you can't do it on a tenant relationship business.
Okay, thank you. Another one is if the landlord's refusing to join the program, is there any option as a tenant?
Short of coming to an agreement with the landlord outside of the program, The only real other option for the tenant is to try and apply for some other relief. Unfortunately, it's designed to come from the top down instead of the bottom up. So if you don't have a landlord that's willing to participate in the program for whatever reason, and there's some that are valid, but others are unwilling to even really entertain negotiations. It's something that has come up. Tenants are encouraged to press their property owners or their landlords to try and get participation. Like I had mentioned, maybe it's a timing concern for the landlord. But in terms of being able to go above the landlord or force their hand or back them into the program, unfortunately, that's not an option that the tenant has available to them.
Okay, thank you. I don't see any more in the question box. I did have actually a question for you myself, was around the 70% reduction. So I know you said that you can either use last year's revenues numbers if you have them, or the average of January and February, I believe.
Right.
Can you choose which one is better for you in that scenario, or you can only use January, February if you actually weren't operational the previous year?
The criteria is if you weren't operational last year or didn't have revenues that you could otherwise compare it to, you can use January and February, but they would encourage you to go back and look at last year's numbers.
Gotcha. Okay. Appreciate that clarification. And last one that I had was, I understand you said there's templates online and different things. Do you encourage tenants and landlords to actually seek independent legal advice while going through this process?
Absolutely. I would encourage probably both parties to get independent legal advice. The forms online are in pretty good shape. That being said, I certainly think the rent reduction agreement could be done in the form of a lease amending agreement instead. I think that gives the parties more flexibility because that way it ties directly into the lease. You can use the existing lease terms and the lease concepts in there. The parties then have a very clear understanding of what rent is because it's often defined or elaborated on in the lease itself. Plus, I think there's probably some valid things that could be included by way of lease amending agreement that aren't included in that standard template, such as the confidentiality provision, such as the continuous operation kind of waiver or statement to say that we're not going to be in breach of the lease by failing to continuously operate given the circumstances. You can obviously come to different terms that if maybe it's like I said, it's time to renew the term, maybe you want to give some rent-free months for other months in exchange for moving some things around. Overall, I think getting independent legal advice and maybe opening up lease to a broader discussion probably has some merit for both sides, and is probably a better way of evidencing the nature of the deal between the two parties. And on that note, the CMHC has pointed out that you don't have to use the standard forms. They're there for reference. They're there if it suits your needs. However, if you have other items you'd like to address or other things you'd like to make sure are incorporated, you're encouraged to do your own form, and you can actually upload that form instead during the application process.
Okay, great. Well, thank you, Cole. I really appreciate everything. I don't know if you have anything you wanted to just summarize. We're coming to the end of our time. So if you wanted to bring anything else up that you missed, or this is your chance. I don't want to see any more questions in the question and answer box.
Absolutely. And, to the extent that there are some questions that people want to ask or that they don't feel I answered sufficiently, please let me know or reach out. I'm more than happy. Maybe that can be facilitated through Natasha. I'm more than happy to always answer these questions. It's been a bit of a moving target. I completely understand that people have a number of obligations and a number of things going on in their lives right now. That this is obviously a pressing concern, but there's other priorities that can pull them in competing directions. So to the extent I can help elaborate on the program or provide some concrete details, I'm more than happy to do that. It's a situation where sometimes the tenant and the property owners are supposed to be in our heads envisioned to be adversarial, but this is a time where working together and coming to an agreement to facilitate this for both parties is beneficial and something that I think will maybe change the way landlords and property owners and tenants work together moving forward, hopefully.
Mm-hmm. Well, thank you so much, Cole. I guess we will call the meeting to end. I'll put up some contact information for our organization. So if you do want to reach out for questions, as Cole mentioned, that we can facilitate some of those. And otherwise, though, I'd say we could call the session to end. I'd also invite anybody on the line who's interested in next week. We'll be hosting a session on June 19th. It's a panel discussion with a number of people related to safety. So those who work in safety have some idea around reopening and safety measures that need to be put into place. So you can find information out about those on our website and our social media accounts. I'll share our contact information with our website. And I also encourage you to check out wbcentral.biz, which is a new portal that has been created in partnership with a number of stakeholders to help support the business community. So I'll share the information right now. And thank you everyone for joining the call. Really appreciate that.
Thanks very much, everyone. I really appreciate you having me.